Good afternoon, everyone, and thank you so very much for joining us today for this home buying workshop. My name is Magdalia Gomez, and I'm one of the co-presenters today. I'm joined with Daisy Familia and Sarah Scruggs. Sarah will be monitoring our chat and asking questions, and Daisy will be our main presenter. Before we get started, I want to go over some general details. We know that some folks are still logging on and may have some questions for those of you that are on. So the way that today's presentation will work, we will ask uh, for you to utilize the chat if you have any questions, and we will also send the recording and the presentation. So if any of you have to head out a little bit earlier, we understand and we want you to have that information. So be aware that we are recording today's presentation and we'll email you both the recording and the slides and also Daisy's contact information. So if you have any questions, all of the information will be sent to you and you can reach out to us at any point. We always want to make sure that you're able to hear us and that you know how to ask questions. There's, the home buying process, as we'll see in the next hour, has a lot of ins and outs, and we understand it can be at times confusing. So we want to make sure that with the time that you have with us, there's anything that we can clarify, that we do that for you. So just to make sure that you know where the questions panel is, please let us know, when are you looking to buy a home? Feel free to say, in the next year, in the next 2 years. Just provide us roughly a timeline of when are you looking to buy your home. Again, you can submit this answer in the questions panel, which will be either in the top hand navigation or on the right hand. Ultimately, it will depend on how you logged in, but this will allow us to see that you're able to hear us and that you know how to submit questions. Okay, so I see folks are saying 2 years, within the next year, this year, next 2 to 5 years. Thank you. So a lot of next to within under 3 years tends to be the most popular. A lot of folks for this year as well. Thank you so very much for letting us know. I'll talk very briefly about us, who we are at the credit union, before turning it over to Daisy. So we are Harvard's not-for-profit financial institution. Essentially, we are the same as a bank, but ultimately we are able to do things a lot better because of our not-for-profit mission. And because you are part of the Harvard community, you're all eligible to be members of HUECU, and everyone in your household and in your family is also eligible to join. And that is all that I will say specifically about the credit union. But if you have any questions or would like to learn more, feel free to utilize the questions panel or check out our website for much more details. Today we have Daisy Familia, who is one of our 4 mortgage loan experts, who's going to be talking to us about the home buying process. It's a lot to cover, so I will just turn it over to Daisy and let herself give herself a little bit more background and then proceed with the presentation. So Daisy, I'll turn it over to you. Thank you.
Thank you so much, Migdalia. Good afternoon, everybody. My name is Daisy Familia, and I am one of the senior mortgage loan originators at Harvard University Employees Credit Union. One thing I want to mention is that this is your presentation. So if you have any questions, please feel free, and we'll answer them as best we can. If not, we could also set up an appointment to speak, and I could answer any questions you might have. So some of the benefits that we offer at the credit union for first-time home buyers are we give you a, an 81% rate discount. We also give you the pre-approval for free. The pre-approval is good for 90 days. At the time of pre-approval, we're going to pull your credit. It's going to be a hard inquiry on your credit. You also get a discount of up to $500 towards the closing costs. Depending on where you're buying your property and on your income level, based on that particular city, you may be able to get an additional $500 credit towards closing. The closing attorney fee is discounted by $150, and that's if you use one of the attorneys that we have on record with us. We're available 7 days a week, including evenings. And if you would like to schedule an appointment, as I mentioned earlier, it's basically on our website at huecu.org/um, mortgage loan originators, or if you find us by name, and you can schedule an appointment. So we're going to navigate into the home buying process, and one of the questions I get asked a lot when I first meet with a client is it the right time to buy? Um, I would say it is, although right now it's a little tricky. Just people are still buying property, but there is not a lot of properties on the market. There's not a lot of inventory, so competition may be a little harder. And that's why it's good for you to be prepared and to know basically what you're getting yourself into. Housing prices are pretty much they stay high on the high side. However, the interest rates are excellent right now. So it basically balances out. So I would say it is the right time to buy, but if you are a prepared buyer, so right now like whereas before you can go and go to open houses, view properties, just because there's still some COVID-19 restrictions. It may be a little bit more cumbersome to go in, and basically the sellers want a more serious buyer. They want somebody that has already been pre-approved and that they know that is already qualified to buy a property should they choose to make an offer. Some of the benefits of owning a property is you can build equity. Whereas if you're renting, you're paying basically helping somebody else pay for their mortgage and build their equity. If you buy your own property, you can build equity on your property. And in some instances, you may want to check with a tax advisor. The interest rate that you pay on the mortgage could be tax deductible, as well as the property taxes that you paid could potentially be tax deductible as well. So right now, because the competition to be a buyer is so stiff, having the right team by your side could make or break your deal, or it could be in the difference between you paying a little bit of a higher price or a higher fees for your deal versus the other way around. So you want to make sure that you have a real estate agent that is somebody that is full time, that is available, just because timing could mean whether or not could make the difference of whether or not you are able to buy the property and get your offer accepted. There's different types of agency relationships. There's one that is the seller's agent or the listing agent, and the job of that agent is basically to represent the interest of the seller. There is also the buyer's agent, and typically the seller is the one that pays for the fees for both their agent, the seller's agent, and your agent, the buyer's agent. There is also there may be instances, let's say that you go into an open house and the listing agent is there showing the property and you decide to work with that agent. That is okay. It's not illegal. But just keep in mind that the primary interest for that agent is to represent basically the best interest of the seller. So you may want to get somebody else involved in the transaction, maybe the office manager or somebody that to facilitate the transaction just to make sure that your interest in the buying of this property is also protected. As I mentioned earlier, having the right team by your side could make the difference on whether or not you get a really good deal on a transaction or whether or not you have to pay a little bit higher, either for the property or whether or not you get your offer accepted. So that's why when you hire an agent, I always recommend that you interview them. Do not sign a contract until you're sure that that's the person that you want to work with. You want to make sure that it's somebody that is full time, that is experienced in the area, and that has knowledge, like that is knowledgeable in the community where you want to buy the property. There may be times where you go look at a property and you want to make an offer. So typically what may happen is that if you know the community where you want to buy the property, the agents in that community have open houses. So even before the property goes on the market, you may be able to preview the property, or your agent, if you trust them, they may be able to go preview the property on your behalf. And that way you may be able to make an offer before the property goes on the market, and that gives you a little bit of an advantage.
Hello. It seems like we're having a little bit of audio issues with Daisy's audio. Sarah, feel free if you are able
Can you
to.
hear me better?
Okay, there we are, Daisy. Yes, you are
Okay.
back. We did
Sorry.
lose you. No
Okay.
worries.
Oh, okay. So as I was saying, so you will, the main thing is basically to have an agent that is based on the community of where you want to buy. That could help you a lot when you're thinking of making an offer. A lot of times when somebody's putting the property on the market, they have an open house for the agents in that community. And if that is the case and you're working with one of those agents, they may be able to preview the property, or if they already know exactly what you want in a property, they may be able to get a, get you in the property before the property goes officially on the market. And that may be what is happening a lot depending on the community now. You may, if you are looking right now, like just to get an idea of what's on the market, you may see that a property goes on the market today, and then a couple of hours later it says pending, meaning that an offer has been accepted. And that could be a little bit of a competitive edge for you as a buyer, so that you can, so that maybe if you can get into the property before it goes on the market, so that your offer is the one that is accepted. Also, another item is that you may want, so when we look to lend you money as a buyer, um, we need to make sure the property has sufficient value. And the way we do that is with an appraisal. The appraisal is basically done by an independent third party company. And what they do is they look at the property, the condition of your property, the property you're buying, and compare it to other properties in your area that compare to your property, and look at what those other properties have sold for. So if your agent is in the community where you want to buy, they may be able to give you an idea of what to offer on a property so that you can get the best possible price. So when you're looking and you're meeting with a real estate agent and you're looking to narrow down the agent that you want to work with, just make sure that you're really clear as to what are your absolutely needs and wants. So the wants could be something that you can tweak as you look at more property and see what's available. The needs, like if you need to be near, say, transportation, or if you need two bathrooms, or if you need like a one level property versus a split level property, and so on. You want to make sure that you're clear in what it is that you want with your agent, because that basically could help you get a property quicker. So that way you're not wasting time viewing properties that you're truly not interested in. You want to also make sure that your agent is aware of your likes, dislikes, and so on, so that it could be a smoother transaction for you. And if possible, maybe have your agent preview properties for you as long as they know that what your likes and dislikes are. That way you don't have to be wasting time viewing 10 properties versus if your agent knows what you truly want and need in a property and your likes and dislikes, they may be able to preview them on your behalf and basically let you know this is what this property is about. And then you can, if you want to proceed and go view the property for a second time, you can. Or if not, you can move on to the next property that you're looking for. And as I was saying earlier, you may want to have your agent do an analysis just so that way you can know what your property or have an idea of what has sold recently and what you maybe want to offer on a property so that when you go to, let's say, to the next step of submitting a mortgage application, then you know that the property, there's a high chance the property is going to appraise for at least the value of what you're paying for the property. So when you're looking for properties, you may want to, location is very important. Whether you're thinking that you're going to be, this is your forever home, or if you're thinking that you're going to sell the property in a couple of years, you want to make sure. So typically, the way it works is depending on the school district. Like if you have small children, you may want a location where the school district is high, and you can do your own research um, with the level of like they basically grade the school district depending on how good the schools are perceived to be. So the higher the level of the school district, the higher the taxes. But also that means that if you have small children, you may not have to put your children in private school and so on. You may want to consider whether or not you're going to be commuting, whether you are willing to drive and so on. I mean, right now, I would say one little bit of a positive aspect that happened with COVID-19 is that we have the option of working from home, a lot of us. So that may help you instead of buying a property in the city, if that's what you don't want to do, you may be able to go a little further out, but you can still work from home and so on. So the purchase process, this varies from state to state. In Massachusetts, there is a two-step process when you're thinking of buying a property. One is that basically you make an offer, you put the offer in writing, and your agent, or if it's for sale by owner, you may be able to present it to the seller. The next step is you go to the next contract, and these are both contracts. Um, you basically sign a purchase and sales agreement. When you're making an offer, make sure that it's always in writing. One rule we have, or we always joke around and say is, if it is not in writing, it's not true. So you may have a conversation, you're excited, you're making an offer. You may have a conversation with the agent and say, oh, yeah, I want this, that, but you don't put it in writing. That may not happen. You want to make sure that you're clear on your offer price, the closing date. You also want to make sure that um, you're going to give them a deposit to hold the property for you. If you want to do an inspection on the property, make sure that you state that you want to have a home inspection done. There's also going to be a mortgage contingency. And what I've seen a lot as of recent is a lot of agents are suggesting that you waive the mortgage contingency. The only time you will waive the mortgage contingency, or you should waive the mortgage contingency, is if you know you have cash to buy the property outright if you're not able to get financing. Otherwise, you can risk your deposit. You also want to make sure that you review condo documents or have at least an attorney review the condo documents to make sure that the property, the condominium association is financially sound. You don't want to buy a property and then come to find out a month or two after you buy the property, you have to come up with a bunch of cash because the roof, something's happening with the roof or any major expenses that may come up. And anything that you see in the property that you want as part of the transaction, make sure that you put it in writing. If you want the refrigerator, curtains, whether it be a chandelier or whatever the case is, just make sure that it is in writing. The offer to purchase, is a legally binding contract, and it's very important that your agent is diligent enough to get, if the seller is going to accept your offer, to have it signed as soon as possible. So at the credit union, we don't require that you have an inspection done on the property prior to signing the purchase and sales agreement, but we highly advise you to, especially because in Massachusetts, the properties, even in Rhode Island, in most of New England, the properties are really old, and you want to make sure that you are buying a property that is sound, that you're not going to have to come up with a lot of money after recently buying it for expenses or renovations or whatever the case is. Um, so depending on the inspection, your agent may be able to give you suggestions on inspectors in the area. So you can, depending on where the property is located, you how much you have the inspector do, that's going to be the price that you. It's based on, so if the property is a larger property, your inspection cost may be a little higher than if it was like a one-bedroom condominium, for instance. After you have an inspection done and after you reviewed it, if you choose to negotiate on the price, you can. If I wouldn't nitpick, basically as a buyer and say, oh, this paint is cracked or whatever the case is. So anything that is major, you may be able to go back to the seller with the help of your agent and negotiate. But anything cosmetic that could be easily fixed, and if you still want to proceed with the property, I would just go ahead. Obviously, you want to do what's right for you, but that, if basically, depending on the situation and depending on the property, something that could be easily fixed may be easier to overpass it if, let's say that the property had like major, like the roof was going to leak, or if we had, let's say that the property, the foundation was cracked, or anything major like that. So you may want to have those resolved, or you may want to walk away from the transaction if that is what you choose. So the purchase and sales agreement is another legally binding contract, and this contract supersedes whatever transpires as part of your offer to purchase. Again, you want to make sure that this is in writing, and any changes that you may want to make to the negotiation of buying this property that came about as a result of the inspection, you want to make sure that you put them in writing here in the purchase and sales agreement. If you're a first-time home buyer, I highly advise you to get an attorney, and especially if you're buying a condominium, because you want to make sure that everything is good with the transaction, that there's not going to be any issues later on with the transaction. So that you want to make sure that the attorney reviews these documents before you sign the purchase and sales agreement, as well as any condominium documents that may be applicable. When you're signing the purchase and sales agreement, when you're ready to, you have to give a deposit to the seller. It's basically, this is saying that you are definitely going to continue with the transaction, and you're going to do everything in your power to find financing to buy their property.
Hey Daisy, we did have one question come in that someone was wondering, how would someone go about finding an attorney?
So if, depending on who your employer is, they may have programs. I know this, the Midlife Legal Group. Also, we have a list of pre-existing attorneys that They don't work for the credit union, but they work with the credit union in the past, and we've already vetted them. So we could give you a list of attorneys, and you may want to negotiate with them whether. So a lot of times they may even be able to waive the first fee. So there's two fees charged. One is to help you with the purchase and sales agreement and review the condominium documents. The other one would be to help you with the closing of the transaction or finalization of your mortgage transaction. Um, a lot of times they may be able to waive the first fee. Sometimes they may be able to give you a large discount on the first fee to help you with the purchase and sales agreement if we also choose them to handle your closing. We always have to vet the attorney because ultimately the attorney is going to be the one managing all the funds in the transaction. So we're going to give him the proceeds of your loan once your loan is approved, and you're going to give him any remaining down payment and closing costs, and then they're going to pay everybody involved. So you want to make sure the attorney is somebody that is trustworthy and is vetted by the credit union.
Perfect. Thanks, Daisy.
Thank you so much, Sarah. So now we're going to go into the financing process. One step you will want to take, especially for those that are, let's say, 6 months out from starting to be more serious about buying a property, is you may want to check your credit report just to make sure that if there is any discrepancies, that you can take care of them with enough time to go into the finance process of buying a property. The standard credit scores are anywhere from 620 to 830 points. There's different types of credit scores. So what you may see, let's say, with your credit card provider or Credit Karma or Credit Sesame may be different than what your lender sees when they pull your credit. At the credit union, we recommend a credit score of 720 or higher. The higher the credit rating, the better, especially if you're thinking of putting less than 20% down payment and you're going to require to have private mortgage insurance. If more than one person is applying for the mortgage, like if you're applying with a spouse or a family member or even a friend, we're going to check the credit rating for all applicants. And typically we look at the lowest of the credit ratings when we assess a determination of whether or not a loan might be approved. This is also the case if you're required to have private mortgage insurance. Typically, you have to have private mortgage insurance, which is basically an insurance company that guarantees your loan. And the premium that you pay is a monthly premium, and the premium that you pay is based on how far away you are from 20%, but also on the property type and on your credit rating. Somebody with a lower credit rating may get a higher premium than somebody with a higher credit rating, even if the down payment is lower than the 20%.
Daisy, a couple of questions have come in that pertain to this slide, and so I wanted
Sure.
to get them out there. If I wanted to find out how much of a mortgage I could afford before I even start the home buying process, would that be a hard inquiry on my credit report?
Not necessarily. So we have two options at a credit union. My advice would be to set up a time to speak with a mortgage loan originator, whether it's here or somewhere else, just to get an idea. We could do what is called a pre-qualification, and that's basically us having a conversation of your income, what debts you have, and then we could set up you can have a plan, so that you can, let's say that sometimes if you have like a lot of debt, you can set up a plan on what to pay off in order to get to the next step of buying a property. A lot of times people think that by paying off debt, it may be more beneficial. Sometimes having a larger down payment, um, even if you have a little bit of debt, is more beneficial depending on the circumstance that surrounds your transaction. So my best advice would be to set up a time and just have a conversation.
And then one other question. And this, I think, kind of goes into what you were saying that this person may be best to set up a conversation. But what if my credit is low because of having a lot of student loans, but I'm paying them on time?
So yeah, that may be a because we could run the numbers to see. So one thing I should mention is that the credit union, your interest rate is not affected by your credit rating. However, private mortgage insurance is. So we could have a conversation and see you can basically write down all of your debts. We could see what may work best for you. Maybe paying one student loan or consolidating the student loans may be more beneficial. That may help your credit rating a little bit. So yeah, my advice would be to perhaps set up a time so we could have a conversation and see what may work best in your particular situation.
Thanks, Daisy. That's all I have at this point in time.
Thank you so much, Sarah. So in order to determine how much you can afford, that would be the best situation would be doing an express pre-approval. But as I mentioned before, if you're not ready to have a hard inquiry on your credit, then having a conversation with a loan officer or loan originator may be more beneficial. Just make sure that you write down all of your minimum payments. If you have student loans, the outstanding balance of all of your student loans, and then your income. And we could run numbers in different scenarios to see what may work best for you. And that way you can, if you have a little time before you're thinking of buying a property, you can work on those and then we could do that multiple times as well. So you can have an idea where you are in the process and how ready you are to buy a property. But once you're ready to go to the next step, let's say that once you are 6 months out, um, yes, the pre-approval expires after 90 days. However, if by day 85 you're still actively looking for a property, um, we could reissue the pre-approval for another 90 days. So in essence, you have 6 months to buy a property. All we're going to need is to verify your income, and we don't have to do another hard pull inquiry on your credit at that time. The application for the pre-approval is online. It takes about 5 minutes. It's basically information about yourself, any other applicants, and then receiving your authorization to pull credit. The pre-approval process takes up to 48 hours. It may be done quicker if let's say that you're thinking of buying a property in the weekend. You come to us. Just make sure that you let us know that you're thinking of buying a property quickly, so that we could try to rush your pre-approval request within reason, depending on the volume. Some general guidelines that we have when looking to see whether or not somebody can afford a mortgage or how much of a mortgage you can afford um, is basically that we look to see what the debt to income ratio is. Um, what we use on your debt to income ratio is any housing payments, and that is principal, interest, property taxes, homeowners insurance, homeowners association dues for a condominium, and depending on the condominium itself, whether or not they have insurance that also covers the inside of a unit or not, you may have to buy an additional policy, which is called an HO6. Typically, we recommend that the housing payments do not exceed 36% of your income before taxes or deductions. And typically, we recommend that the total housing payment plus any other monthly credit obligations or anything that's mandated by law, such as child support, alimony, or separate maintenance, that number does not exceed 43% of your income per month before taxes or deductions. So when you're looking to buy a property, there's some loan limits consideration. One is whether or not your loan will be considered a conforming loan or a jumbo loan. Typically, jumbo loans have a little bit of a higher um, or stricter requirement just because of the perceived risk for this type of product. Um, a conforming loan limit right now, this changed a little bit, is any loan amount for a one-family property that is 724,500 or lower, and that could be a single-family home, condominium, or townhome, and or for a two-family property that is a little over $1 million. And we could send you the information as well. More updated. They just changed the limits recently. A jumbo loan is any loan amount over the conforming loan limits. So for a one-family property, a jumbo loan will be considered a loan amount of 724,501 cents for a one-family property or over. So typically with jumbo loans, you may require to have a larger down payment. It may be a little bit more difficult to get PMI depending on the situation. And also you're required to have at least 6 months worth of housing payments. So principal, interest, property taxes, condo fee, if applicable, and insurance in an account. And it could also be in a retirement, like a retirement account that you own.
Daisy, a couple of questions have come in. One
Sure.
about the debt to income ratio, specifically for a multifamily. Can you include the rental income in the debt to income ratio formula?
Potentially, yes. If you're a first-time home buyer, um, so basically, in order to include a projected rental income on a multifamily, you have to have been a landlord or a property manager for at least 1 year. So first-time home buyers typically you have to be able to qualify for the loan on your own income. However, if you've been somebody that has owned property before and you've been a landlord for at least 1 year and you have history of being a landlord or a property manager, then you may be able to use the projected rental income for the property as your income in order to qualify for the mortgage.
Great. One other question, and kind of goes right into it. What qualifies someone as a first-time home buyer?
So a first-time home buyer is somebody, this is the definition of a credit union. Every lender may have a different definition. Is somebody that has not had ownership interest in a property in the last 3 years. And that includes, like, let's say that you, your mom, dad, or your parents put you on the deed to the property. Even if you have not signed a mortgage, you are not a first-time home buyer because you have ownership interest in the property. So it's basically somebody that has not had any property or any their name on a deed for the last 3 years.
Thanks, Daisy. And just to let you know, we have about 20 minutes left in the presentation, so a quick time check on that.
Great. Thank you so much, Sarah. So we're going to go over the down payment requirements. Um, so if you're buying a one,
Hey, Daisy, I think we're having some sound issues.
can you hear me okay?
Yes, I can hear you now.
Perfect. So for down payment requirements, if you are a first-time home buyer, depending on the loan amount, any loan amount below 500,000, you may be able to put as low as 3% down payment. You do have to take a course, and we could send you the link. The course is free, and you get a certificate in order to be able to put as low as 3% down payment. The standard down payment for a one-family property, um, as long as it's a conforming loan, is 5% down payment. You may be able to put as low as 5% down payment up to $1 million on a single family property. if we're able to get private mortgage insurance approval. If you're buying a property, a multifamily property, that's where you own more than one unit, in a one, like a dwelling, then you may, if you're looking for a fixed rate mortgage, and the property is a two-family property, you have to put as low as 15% down payment. If you're looking for a 3 to 4 family dwelling, then you have to put at least 20% down payment. If you're looking for an adjustable rate mortgage, and that's where your rate will be fixed for a certain time period. For instance, if you're looking for a 15-1 arm, your rate will be fixed for 15 years. The repayment period is based on a 30-year repayment, but then after 15 years, your rate could increase or decrease. But you can refinance. There's no prepayment penalty on any of our mortgages, so you can pay it off as soon as you want. Or if you're thinking, let's say by year 14 that the rates are going to go up, then you can start looking to refinance your mortgage. And as I mentioned earlier, any down payment below 20% typically requires private mortgage insurance. As a credit union, we also have another option depending on your credit rating. As an alternative, you may be able to, if you're thinking of putting at least 10% down payment, you may be able to get what is called an 80-10-10 mortgage, or 80% is a first mortgage, 10% is your down payment, and 10% could be a second mortgage. Or if you're thinking of putting 15% down payment, you can have 80% a first mortgage, 50% your down payment, and then the remainder, 5%, could be a second mortgage. So as I mentioned earlier, we're going to go into a little bit more detail with adjustable rate mortgages. So there are two loan options. One is a fixed rate. The fixed rate means that whether you go with 30 years, 20 years, 15 years, the rate is fixed for the life of the loan. With an adjustable rate mortgage, right now, because the rates are pretty much the same for fixed as adjustable, depending on your situation, and if they say that the rates for the adjustable rate mortgage were to be much lower than the fixed, if you know for sure that you're not going to be in the property, let's say more than 15 years, then this may be a better option for you, because typically with adjustable rate mortgage, the rate is much lower than that of a fixed rate. And that way or if you're thinking that you're going to be aggressive in making additional payments where you're going to pay it off sooner, you may save more in interest if you were to do with an adjustable rate mortgage versus a fixed rate mortgage. But right now, the rate situation is a little strange just because of what's going on in the market. So right now, there may be times where the rate for the 15-1 arm is the same as a 30-year fixed, or depending on what happens in the future, the 30-year fixed could be higher, and it may be a better option to go with either a 5-1 arm, 7-1 arm, 10 or 15-1 arm, etc. So closing costs are the fees and costs that you're going to be paying to get into this property. Some of the costs, most of the closing fees are depending on the city, county, type of property, and also on the attorney that handles your transaction. But aside from closing costs, if you're putting less than 20% down payment, or if you want to have an escrow account, then those will be a portion of that will also be collected as part of your closing costs. And an escrow account is basically a savings account behind the scenes of your mortgage, where we collect money from you to pay for your taxes, flood insurance, or if you have private mortgage insurance, for your private mortgage insurance. We also have another option that is called a no points, no closing fees option. The rate is a little bit higher than that of like a standard loan where you pay the closing costs, but that may be a good option for somebody that doesn't have as much down payment. That way you don't have to come up with a closing fees up front. And then if you want to refinance later on, if you come into money, then you can do that as well.
A couple more questions before you start kind of rounding out the presentation. The first
Sure.
one being, if you want to use that rental income and your debt to income ratio, does the experience of being a landlord have to be in the US or could it be internationally as well?
Typically, the experience has to be in the U.S.
Perfect. And then another question, if you inherited a property and began paying the mortgage on that, would you still be considered a first-time home buyer or not?
It all depends on, so it's not so much the paying the mortgage, it's whether or not your name is listed on the title to the property. So if you're listed on the title, then you wouldn't be considered a first-time home buyer. The deed is what says who's the owner of the property.
Perfect. Thank you, Daisy.
Thank you so much, Sarah. So typically the first step when you're looking to start buying a property is to get pre-approved, or if you are really far out, like more than 6 months far out, then it will be to get a pre-qualification. You set up a time with a mortgage loan originator or mortgage loan officer just to get an idea where you are so you can know what best steps to take next in order to have a successful home buying process. Once you have an offer accepted, if you know if you're not going to do an inspection or if you did an inspection as part of when you went to view the property, and you know you're not going to change your mind on the property, then you can go to the next step of submitting an application. But typically, you either have to have an offer to purchase accepted and a purchase and sales agreement. But we can start the process if you already have an accepted offer. It's just that we're not going to be able to get the appraisal until we have an official purchase and sales agreement. Once you submit your application, your rate is locked automatically at the credit union, and your rate lock is good for 60 days, 2 months. So we're looking to complete the transaction within 2 months. We may be able to complete the transaction sooner. I've seen it where we will be able to complete it within 3 weeks, as long as basically everybody involved in the process and we're able to get the appraisal on time, gets everything in a timely fashion. Once you submit the application, you also get automatically a loan estimate just to give you an idea of what you may need to bring to closing. The loan estimate could be adjusted as the transaction progresses and as everything is verified. We're going to ask you to supply any documents. So basically what we're looking to do once you go to the next step of submitting the application is to confirm everything that you stated when you were pre-approved, that you have enough money for down payment, that you have enough money for closing costs, and that you truly qualify for the transaction. There's going to be a more in-depth look of your finances, your income, and so on. So once the initial application has been processed, we're going to issue a commitment letter. And the commitment letter is basically what you'll need if you have a mortgage contingency on your purchase and sales agreement. This is what you need to give to the seller to tell them that you already have financing to proceed with the transaction. Depending on when your closing date is, a few days before the closing date, 7 to 4 business days before the closing date, the closing attorney is going to send you what is called closing disclosures, or CD. And this basically gives you an accounting of everything that transpired on your transaction. So whatever down payment you gave as part of making the offer or the purchase and sales will be reflected here. Or if you pay for any items up front, that will be reflected here as well. So before you can close, You want to make sure that you receive the closing disclosures. You want to make sure that you acknowledge that you receive the closing disclosures at least 4 business days before the closing can happen. And you also want to, with the help of your agent, you want to make sure that you perform a walkthrough of the property just to make sure that whatever you asked for as part of the accepted offer or purchase and sales, whether you wanted a chandelier, you want to make sure that everything is inside the property based on whatever you requested when you sign the purchase and sales. If you're buying a single family property or a multi-family property, the attorney is going to want to see that you have insurance and typically will require that you pay for the first year worth of homeowners insurance upfront. The closing could take approximately an hour, give or take. A lot of times the closing attorney sends you the closing package before the closing just so you can review it. And if you have any questions, you can ask any questions. And it's basically a lot of documents you're going to be signing as part of the transaction. You want to make sure that you bring a government issue ID on your checkbook just in case. And depending on the attorney, a lot of times they'll ask you to send them a wire transfer for any remaining down payments and closing costs up front. Sometimes they require that you have a certified check, depending on the attorney that's part of the, that's handling the closing of your transaction. And these are some resources that you may want to take advantage of. One resource is something that the credit union is in partnership with. It's basically Green Pass. And Green Pass basically there's a few certified agents. They're financial advisors that could give you advice on how to proceed. They may be able to help you preview your credit as well and just give you an idea of what steps to take in the next. And they could help you with a budget and so on. Another resource would be you can check your credit at annualcreditreport.com. Or if you want to view properties just to narrow down where you want to live, you can look at Redfin, Zillow, or if you want to get ready to go to the next step to get pre-approved, then huecu.org/pre-approval will be the next step. So please help us help you better just by completing the survey, just letting us know about actually what other classes or home or presentations you would like to see, just to so that we could know what basically what information you would like. And also, please feel free to make an appointment either with me or any of my colleagues, just to have a conversation so you can get an idea of how ready you are to go to the next step in the home buying process.
Thank you, Daisy. So we did get a couple more questions, so just want to ask you a few of those before we end our presentation today. But if you do have a question, please don't hesitate to continue writing those questions in. I've put a couple of links in the chat as well with more information about GreenPath, as well as information on how to contact our mortgage loan experts. And there is one that's, can you review how to calculate how much one can afford for a house? And this is a really great question. I'll actually plug our website for a moment. On our website at huecu.org/calculators, we actually have a calculator under home loans section of the website that says how much home can I afford? And that will give you a rough estimate of what you could possibly afford there. And so that's a really great place to kind of start. And then setting up an appointment afterwards would be the next step there, if you think that's correct, Daisy.
Exactly. I mean, if you want to have an idea, just run some numbers on your own. But if you want further confirmation, then setting up an appointment will probably be the best bet, just to get an idea of a more accurate idea of what you may qualify for.
Another really good question just came in. Do you need to be a member of the credit union in order to set up an initial appointment with one of our MLOs?
Absolutely not. I mean, we want you to be a member. We would love for you to be a member. So you don't have to be a member even to get pre-approved. However, once you find a property, if you decide to proceed with a credit union, then becoming a member is one of the requirements in order to obtain a mortgage.
Thank you, Daisy. And kind of to that point, um, everyone who works for DFCI is eligible to become a member of the credit union. So if you work at DFCI or spouse partner works at DFCI, then you are eligible to become a member of the credit union. And then another question came in, can we use your services for a home purchase outside of Massachusetts?
So at this time, we finance Massachusetts, Rhode Island, and parts of New Hampshire. There's been talks to opening the finance process nationally. It's basically that we have to get a license for every state that we finance in. So stay tuned.
Yes, so a little tease for what could possibly come, but about 100 miles outside of our Cambridge office is where we can um, do mortgages, correct, Daisy?
Exactly.
Okay, wonderful. If there are other questions, we're happy to hear those, but this is all that we have at this moment in time. And thank you, Migdalia did drop the link for the survey in the chat as well. So if you could let us know um, what you've gotten from this presentation in our survey, that'd be wonderful. We can continue making these presentations available for you. And just a reminder to everybody, we will be emailing you with the presentation as well as the recording of the presentation either tomorrow or Monday morning, so that way you all can review the information on your own, get those next steps in order for what your plan of action will be. And that way you all can have this information and feel empowered to move forward. I don't see any other questions at this time. Daisy, is there anything you'd like to say?
So yeah, I mean, we're here for you. Ultimately, we want to help you get as much information and be as educated as possible so you can have success in buying your property. It is a big step, and I know we've given you a lot of information, but please feel free to reach out, and we're happy to help.
Thank you, Daisy. Migdalia, is there anything else you'd like to add? If there is, I'm happy to pass it over to you, but if not, we will go ahead and end this. And please don't hesitate to reach out if there are questions. So go ahead, Migdalia.
Thanks, Sarah. The only other quick thing I just wanted to mention for other sessions that we have upcoming, you can register on the same page that you registered for this session, and I'll drop that in the chat, which is huecu.org/DFCI. Thank you, and I'll turn it back to you.
Absolutely. Thank you, Migdalia. And we do have a credit reports, scores, and cards presentation coming up for our entire community on March 18th at 12:30 in the afternoon, as well as that presentation given in Spanish at 5 p.m. on March 18th as well. So if you're interested in learning more about credit, we touched on it today, but if you're interested in learning more, you can find our upcoming credit session at the link that Migdalia just put in the chat. Thank you all for joining us, and we hope you have a wonderful afternoon.